Welcome back to the channel, guys. So we are back with another video, and today we are going to talk about some of the most profitable candlestick patterns, and those are going to be the engulfing, double top, and the tweezer top and bottom. So without wasting any time, let's start right away. So what are these candlestick patterns? So you have to be very careful. Candlestick patterns are not indicators to signal any confirmation or opening a position, but you have to incorporate these candlestick patterns with your technical analysis. So we are going to start with the tweezer top and the tweezer bottom. So how does the tweezer top or tweezer bottom looks like? This is any two candles at the for example, when you make your technical analysis, you anticipate that at some point where there is either a trend line or a support or resistance, you anticipate a change in the trend, a change in the direction or price of any currency or commodity. So at that point, when you get a candlestick or a pattern, this will show you that here where you are expecting a change in direction, you will get a confirmation from how the market structure will create these candlesticks. So it means you don't go by the candlesticks, you go by your technical analysis, and then the candlestick will just give you an extra confirmation. So it will be a confluence of two confirmations: technical analysis and how the market looks like on the candlesticks. So we are starting with this tweezer top or tweezer bottom. So we have plotted some examples here, as you can see. For example, here we had a market that was trending to the upward side. Now this would show you that we had we drew a trend line here where the market was crossing and touching for the third time. Here we experienced a tweezer top. These are two candles that are exactly the same size or a little bit less or more, with wicks either on the top or bottom, whatever it can be. But these two equal candles exactly will indicate that here we have a change in the trend or a retracement to the opposite side. Now if you go into a lower time frame and you try to look at this, it will be a double top. For example, if you go into a 5-minute chart, because you are looking at this example in a 1-hour chart, let's try to go. It's on date 17th GBP USD. Let's go in 5-minute chart and see how it looks like. Date 17th, let's see right here. So it's right here, date 17th. You can see how price moves up, down, goes back up again and down, and then still in the 5-minute chart, this is a very good example, we are still getting another tweezer top again. So this is a double confirmation. Even in the 5-minute charts, we still get another tweezer top. So this is very good. Let's go back to the 1 hour. So this is our first tweezer top we have spotted, and we are seeing another one here. So these two candles, the same equal heights, but if you look at our trend line where we are plotting the price to touch and retrace, we are seeing a confirmation in the 1 hour. So this is another confluence. A move up and down of equal size of these candles will indicate a double top in the lower time frames. So this is another confluence of trend line and the candlesticks to open a position to the opposite side, which will be a buy position right here, a sell position right here. And as you can see, the move was pretty good. And also here, as you can see, the move was also good, something like let's see, 10, 20, 30 pips, and here it was like 10, 20, 30, 40, 50 pips. So this is a very good one. And if we can move back, we had plotted some again also here. If we look properly, we are looking at a tweezer top right there and a tweezer bottom right here. So this is our first very example of a tweezer bottom. Now if you can look properly, there was a move to the downward side again it went to the downward side for the second time. And if you look here, this tweezer bottom presented an opportunity to the opposite side that went for something like let's see, something like 30 pips. Though the volume was very low, but the opportunity was also there. A little bit of scalp and you get that 30 to 40 pips. And let's see here, we are looking at another tweezer top right there, because if you look here, there was a fair value gap. Price broke to the broker to the downward side, it came back, retested in the fair value gap, presented another opportunity. But if you come back a little bit on the following day, that fair value gap, we got a tweezer top again in the fair value gap. Now this was a double confirmation. You have a fair value gap, and in the fair value gap you get a market structure that creates a tweezer top. So this is a straight up entry to the opposite side, which could be a sell. And here we saw an opportunity that created something like 30 pips right there. So those are some of the examples we had seen on GBP USD. So let's try and look at the engulfing candles. So how do you use the engulfing candles properly? Remember, all these candlesticks or market structures, you always use them in combination with other technical analysis. Not only every engulfing candle will present an opportunity to enter a trade. If there is no market structure you're relying on, it means you're going to always put yourself in a difficult position. Open orders where they are not yet confirmed. Now, for example, let's look at a lot of confirmations we are seeing here. So let's start from here. So the market broke resistance right here. We had a support here that created this move. We had a support right there, and if you can look properly, the support was broken. Now you wait and see if this support is broken. How is the market going to react when price comes back to that support level? Is the market going to reject, or the market is going to break again and go back to the upside? But if you look properly here, when price came back to that level, the market created an engulfing candle. So this was very clear, an opportunity to enter a buy position, a sell position. So this move to the downward side was confirmed with an engulfing candle. So in engulfing candle, the red candle will always be bigger than the green one to open that position if the technical analysis is already in place. Now if you look properly, we are waiting for other confirmations from our technical analysis. Now this is the support that is created again, and if you see, if you plot your lines properly here, you are seeing a support that is broken to the downward side twice, and then you see a confirmation below the support with an engulfing candle. Now this shows you that the move is actually going to break to that downward side. Now that's another opportunity, and if you look at that support properly, every time price comes back there, it is creating another opportunity to enter to the downward side. You can even enter in the zone if you're experienced properly with how to plot the demands and supply, or the supports and resistances. You can enter in the zone also, and you look right here, when price comes back at that support level that was broken, you see how those engulfing candles are created, and they open up opportunities to enter those positions. Right here for the fourth time, and right here you can see after that candle was formed, the engulfing candle, you can see the opportunities presented. So engulfing candles, you have to add them with your technical analysis. You don't have to use them everywhere, because there is an engulfing candle that comes without technical analysis and you totally get nothing from it. For example, like this one right here, engulfing candle, and the market creates a huge up and down, so it means the candle had zero confirmation. So we are going to look at the last one, which is going to be a double top. Double top is very rare because it comes at the end of a trend. For example, here at the end of this big impulse move to the upward side, you see the market creating equal highs. So equal highs just indicate that the trend is taking a turn to the opposite side. So technical analysis is also basically the study of trends and turning points, and this is one of the turning point of a trend, a double top or a double bottom. So this impulse move to the up created a double top, which ended up into a change of direction to the downward side, and also this move to the downward side created equal lows that created a double bottom. As you can see here, a double bottom that created a move to the upward side. So double bottom or double top right there created a move to the downward side. Now those two are always an indicator that the trend is taking a pause and changing direction to the opposite side. So those are the three candle patterns we were able to look at today. So thanks for watching. If you haven't subscribed, please subscribe and keep following, hit the notification button. We are going to be also we are opening up the Telegram channel, so we'll be posting orders there. So please follow the Telegram channel to get those free orders, guys. It's free for a limited time, so join now. Thanks for watching.